Hey there, everybody. It's Greg Gossett from Gossett Trading and Mentoring Live. How is everyone doing today? Okay, so today is Tuesday, April 23rd, and we are now in the final hour of the market, the hour that I consider the most important hour of the trading day. And so, what we're going to do today, the schedule for today is first of all, I'm going to have to run the US required government disclosure. So we'll get that out of the way. That's about 40 seconds. And then after that, we're going to come back and we're going to look at my current positions as they are right now. And we're going to talk about, if we took profits, how I'm going to manage the trade from here on out. Then we're going to go ahead and we're going to go down through our watch list and we're going to see if we find any setups for today. And if we do, we'll place those near the close of the market. And then if there are any questions, after that, I'm happy to answer them. And if you want me to take a look at any symbols or need some clarification on anything I did today or what my thoughts were, we'll do that. So, okay, first of all, like I said, we've got to run the US required disclaimer, the government disclaimer. So hang on for that, and I'll be back in about 40 seconds. So hang with me.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay, good. We got that out of the way, and thank you so much for uh, hanging with me through that. It's required that we play that before we get started. So, okay, first of all, let's just take a look at the markets real quick, and before we get to my positions, take a look at the general market. So, the Dow Jones looks like it hit an all-time high today. It's amazing. I mean, especially considering where we came from back in December. It's just unbelievable. But that's good. That's good. Today on the Dow Jones, we're at 6766 RSI, which is obviously quite high. Anytime you get up near the 70 RSI level and these third ATR channels, it's pretty high. So, but that's good for all the longs. Great, great, great that they have those positions. I mentioned on yesterday's live stream that, when you look at the Dow Jones on the monthly chart, you can see now we've made a new high, but we have a bearish divergence. We have these MACD bars, very tall MACD bars on this rally. On this rally, we had lower MACD bars, and now on the current monthly bar, we have no red bars. So a divergence by itself doesn't really mean anything, but it does mean something once it reverses and confirms to the downside. So we'll have to see. The Qs, same thing. This is the monthly chart of the Qs. Hit a high today, um, but you can see we had this high, we had this sell-off, we moved back higher, and we're not showing any grain. So just a little something to be aware of. Um, doesn't mean it's going to go down right this second, but technically it's not that great. So, always be careful with your positions, keep these things in mind. And then the SPY looks like we broke out again to a new high on the SPY today. But again, all three indexes have the same pattern where you have highs, uh, you have a pullback, and then you move higher without any greens. So should be interesting in the days and weeks to come. It's a big earnings week this week. So, all right, so let's go to our current positions, and we're having a good day. And let's take a look here. All right. So this is Dexcom. I bought Dexcom back on the 18th of April, And the reason I bought is because we have this bottom here with the deep MACD bars. We had a rally. We broke down, uh, but even though we went lower than over here, do you see how we didn't have any red MACD bars to the downside, even though we're lower, right? If we're here and then here and now we're lower, you would think that you would have some negative MACD bars to the downside. So I did like this, big picture. I did like that we had a lower low and no negative MACD bars. And then the very next day, this bar moves back up, and you see this previous low here. This was a range, and then we broke out of the range. We broke out of the range and immediately reversed. So we had a false breakout to the downside that reversed. At the same time, we had a bullish divergence MACD situation going on here with the lower low. So I bought here on the 18th at 114.51, and the last couple days it's moved nicely for us. It's moved right on up. I did take one profit target yesterday, and did take one profit target today. So it has been a nice trade. When you make a lower low and you start to rally, it doesn't mean you're at the bottom. It just means that this is a good chance that this is just a counter trend rally. So I'm targeting the 50 RSI. Right now we're at 43.65. I'm targeting the 50 RSI as my profit target. But now that it's moved our way, see, I'm a little concerned about this previous range over here. I feel like it might run into some resistance there, but I'm going to let it breathe. Unless it had a horrible reversal today or something like that. But when we bought it here, I used the low of this range as my stop. Now that we've moved up, now I'm going to start moving my stock up as my stop up as well. So we closed above the 10, which is great. We closed above yesterday we closed above the 5. Today we closed above the 5 and the 10. So going forward, I'm just going to have to wait for some kind of price action that tells me it's reversing or it's rejecting higher prices. So at this point, tomorrow, if we closed above the 20-day and then close back below, I would probably go ahead and just lock in all the profits. And to the downside, if we closed under the 10-day, I would also go ahead and just lock in the profits. So but it's been a good trade so far. I can't remember if we took one profit target or two. I think one yesterday and then another day today. So I'm out of about 20% of the position. So anyway, so far so good. It's been a nice trade. All right. Take a look at our next position here. Next position is Merck. Um, I bought Merck back here on the 18th as well. And the reason I bought it is, we've had this large down move, and on the day that I bought it on the 18th, we went below the 200-day and then closed back above. So entering here gives me a nice line in the sand close to where my entry point is under the 200. So if the next day we would have closed under the 200, I would have just gone ahead and taken a small loss. Um, this was kind of an unusual trade for me in that the RSI was very low when I bought it. Generally, I don't buy anything under a 30 RSI, but the reason I did is because we had this confluence of price coming into the 200, rejecting the 200, and also being at the 6 ATR channel. You see these lines 1, 2, 3, 4, 5, all the way up here. These are ATR channels, and a 6 ATR channel means that you're 6 standard deviations away from the mean, and that's quite extended. So that's why I bought it. Rejection of the 200 lining up with the extreme reading of the 6 ATR channel and giving me a good risk to reward ratio. And as you can see, it's moved up nicely. Like I said before, this is quite an interesting trade because the RSI right now is at 29.36. And if it closes under the 30 RSI today, I'm going to go ahead, I'm just going to lock in the entire profit. Um, Generally the 30 RSI, let's say this 30 RSI, generally the 30 RSI gives support, but if it breaks down through that support, then it's going to become resistance. So from the downside going up, if you're at 15, 16 RSI and you come up to the 30, that is going to most likely act as resistance. And, earlier today we were at a 20, I'm sorry, we were like a 31. So we have already gone above the 30 RSI today, and now it's underneath. So if it closes at the end of the day under 30, I'm going to just go ahead and take that, lock in that profit. And it's been a nice profit. And the other thing is that you see this big bar here. Well, when you have big bars and you have counter rallies, it's not unusual and happens actually quite a lot that the price will come back to about halfway of that big bar. And if you have a big bar down and rally to halfway, there is a good chance, not all the time, but there's a good chance that then it will turn back lower or it will just have a tough time getting over that 50% mark of that large bar. And that's exactly, you can see, I mean, almost got exactly to the halfway of that bar. So if this closes under a 29.16 RSI today, I'm sorry, if it closes under a 30 RSI today, I'm going to go ahead and just lock in the profit. And it's been a nice two day trade, almost 2%. Okay, let me check a couple things here. Okay. Okay, on to SPY. So if you've been listening to the live stream, you know that I like to buy the SPY at the close and then sell on the open because over time, and I'll just run through this real quick, but since 1993, if you would have bought the SPY on the open and sold on the close, so you buy in the morning, sell in the afternoon, since 1993, you would have had a negative return of 5.2%. But if you did the opposite and bought on the close and sold in the morning, you would have had a 568% return, meaning that more than all performance in the SPY came in after hours trading, which is just amazing to me. So um, it makes sense. People do bid up the prices overnight, and a lot of people do sell on those prices first thing in the morning. So, as you can see, I bought here yesterday at the close, sold at the open, right? So it was a nice profit. Obviously, this is one of the days I wish I would have stayed in the position, but this has been very profitable since I've been using it in about 37 trading days, I believe now. Just some examples, you bought here, sold on the open, bought here, sold on the open, bought here, sold on the open, uh, bought here, sold on the open. You got the high, and yesterday, 2 days ago was a loss. Bought here, sold on the open, um, but it was profitable today, and I will go ahead and I will buy it again at the close today. All right, and then we also took XLE. We took this trade yesterday. Let's see if I can get a better. Okay, we took this trade because the day before we closed below the 200 day. And then yesterday we closed back above the 200 day. And we also closed above this range, which is a fractal, two prices, two lower highs to the left, two lower highs to the right. Today it's pretty close. We're a little down, a little down. We bought this at 68.59, but there's no damage or anything concerning about the price action of this chart here today. Earlier in the day, yes, but it did rally. So my initial stop on this trade will be will probably be the 200-day moving average or the 10-day moving average. It's hard to say right today. I'll just have to decide what the price action does. My target on this, um, is going to be, my ultimate target will be up here at the 6 ATR channel. This is the 70 RSI. So if we move up to here, it rejects it and closes down below, I'll go ahead and exit my profits there. This is my ultimate profit target here if it keeps moving. And like I said, the stop on this particular trade will be most likely a close below the 10 or the 200. I would probably say initially here the 200. MACD is positive, so it shows positive momentum. We're at 62.89 RSI, so it's a little higher, but I'll be looking at a 70 as far as a place to get out if it starts moving our way. So um, anyway, it's a little underwater today, hardly much. So yeah, that's about it on our positions. So we have Dexcom. If this fails at one of these higher moving averages up here or fails at the 50 or closes below the 10, I will be exiting Dexcom. Merck is at a 28.56 RSI right now. If this closes with the RSI below 30, I will also go ahead and just lock in the profits on that trade. SPY, I will be buying that again at the close today. And then XLE, we bought with the close over the 200 and the close over the range, and a close below the 10 or the 200-day is where I'll be looking to exit that trade. So, okay, let's go ahead and take a look and see if we have any setups for today. All right, hang with me one sec, please. Okay, so Apple, big day today, 1.44% up. We're at 80 RSI. It's amazing. That is a very, very high reading. We have earnings coming up next week. This has been a trend trader's dream, or a buy above the 200. Great buy above the 200. I certainly wouldn't be buying this on a new trade, but if I were in the trade, it's holding above 70 RSI, I would be keeping it, but I would not I would not buy this today. I wouldn't add a new position with Apple at these levels. Just a little too high, a lot too high. Amgen, like the rest of the healthcare, is rallying today. We have this big bar here. We've rallied into about 50% of that bar. Um, yeah, I'm not interested in Amgen here. There's just no setup. So it's always better to just wait for a setup. When I studied with Dr. Alexander Elder, he really tried to have me understand that, there are three positions in the market. There's long, there's short, and there's flat. And what he told me, he says, they're all three of them are positions, and all three of them are legitimate positions. There's time to be long, there's time to be short, and there's time to be flat. And so, I know a lot of people, when they are trading, they think they always have to have a position, but it's not true. A flat position or no position is completely legitimate position. And I would much rather be flat than be in a subpar gambly kind of setup. So remember that all long, short, and flat are all legitimate positions. Amazon, another big day today. Whew, I think we have earnings on Thursday afternoon. So this is definitely rallying strong into earnings. This would have been a great buy for a longer term hold just over the 200. You would have bought here. If it would have closed below, you would have gotten out and waited until it closed back above. But what a great buy over the 200 for a longer term hold. Just amazing. So congratulations to anyone that has Amazon. Boeing, I believe Boeing has earnings tomorrow. So yeah, there's really nothing going on with Boeing as far as the setup is concerned. After earnings, if we were to close above this line here, if we were to close above this previous high, this fractal, two lower highs to the right, two lower highs to the left, and this would also make the RSI a 50 over 50 if we got above here. I would consider buying that tomorrow after earnings. But again, I never want to buy in front of earnings. There's just too much risk. It's too much like gambling. If you feel like gambling, go to Las Vegas. At least you'll get a free room and a buffet and maybe a show. But they give you nothing in the stock market for gambling. Sometimes, you'll have a nice earning surprise and you'll do really well, but uh, you never quite know. So I really just stay away from getting in front of earnings. I'd rather see what happens after earnings. Alibaba is still in a range. There's just no real setup here. I would need possibly on the downside. I mean, right now I would be buying this on the downside if we possibly got down to the 20-day moving average, went down below it, moved back above it with the V1, V2, or even the 50. I think would be a sweeter spot for a close below and close back above, but nothing on Alibaba right now. Caterpillar is range bound. There is really no reason to buy this here. Um, just like Alibaba, if we came down here, had a V1, and what I mean by a V1 is the price spiking down, reversing back up right at this moving average, that would confirm to me that, no one else wants to sell there. Um, but I would tend to key off of the 50-day here. Canopy growth. We talked about this a couple days ago. When you have a nice big gap up like this and you want to play it, an option is you could buy here at the close using a close below this gap up low, right? We closed here and open here, but the low was here. That would give you a good risk to reward ratio. It's a small risk relative to possibly what you could get to the upside. And that was a great trade. I didn't take it. Wish I would have. That was a super great trade. But, in general, your risk is this far and your profit potential is probably multiples of this risk. And in this particular case, 100%. Okay, the Dow Jones, off of its highs for the day, 67 RSI. I'd like to see whether or not we actually got to a 70 RSI today at the high. No, I don't think we did yet. I don't think we did. Generally, if I have an index that gets up into this range and gets above the 70 intraday and then closes below the 70, that would be my reason to get out. And I was just checking to see whether or not that got as high as 70. It did not. It was 68. So anyway, nothing here. This is a great trend trade. If somebody was willing to just ride this out, it's really paid off. I don't really like to get into trades where I have these big rolling ups and downs and ups and downs. I like to get in 2, 3, 4 days, maybe a week, if it starts moving my way. But once I see weakness, that's generally when I'll get out. Dexcom, we talked about that. Let's see where we're at right here. Yeah, it's come down a little bit. It's come down a little bit more again. If it closes under the 10-day, I will be getting out of this trade today and just locking in profits. And to the upside, if it moves up, closes above this 20, and then closes back below, I would also get out. Or if it goes up to the 50 RSI and reverses, I would also get out. So that's the plan with Dexcom. eBay having a nice day today. Does have earnings today, so I don't want to get in front of earnings. Etsy. It's possible that I would be interested in buying Etsy if it were to close above the 50-day moving average here, which is the uh, gray bar. Let me take a look real quick. Just figuring out how many shares I would be buying. Okay. Um, The thing that concerns me a little bit about this trade is that, we're rallying back into halfway again of this big bar. It may close above the 50 RSI. I'm sorry, the 50-day moving average, but it would still be inside of the middle range of this big down bar. So, and the RSI right here is 47.46. Um, well, we'll mark it and see what happens at the end of the day. We'll see what happens. Facebook, big strong day. I believe it has earnings tomorrow. Let's see. Earnings. Yeah, has earnings tomorrow, I believe after the close. So we're at a 73.28 RSI. It's just too high to buy for me. If I were long here, if I would have, right here taken this trade back above the 200-day and I was still long, I would be looking for a close under 30 to be taking my profits. But if I were long, I would actually be taking my profits anyway because we have earnings. Five below, nice trade right there over the 50-day moving average. See how we closed below the 50, back over the 50, and that certainly was the time to get in, and that has been a one-way train all the way up, 75.90 RSI. So if I were long here, I would be getting out if we close below the 70 RSI. Swiss franc. Swiss franc is having a tough time. Big volume today, big gap down day, 20 RSI, just very bearish right here. Um, yeah, yeah, I want to stay away from that. Gold did open lower and reverse. It did have problem with the third ATR channel when it reversed. It's a 34.74 RSI. I might be interested in buying gold if we got down to the 30 RSI. Close below, close back above. That might be something I would be interested in. But where it's at right here to 34.74 RSI, I would not be interested. Google, big day up 1.41%. Has earnings coming up. Um, not a trade for how I trade, just too high. But if I were long this, if I was long this on some type of trend trade, I would definitely get out if it close under 70 or close before get out right before earnings. Goldman Sachs, I would be interested in buying Goldman Sachs if we could have a break back above the 200-day. Um, but where it's at right now, not interested where it's at right now. Possibly here at the 50, if I had the right price action, move down below, close back above, that would put me in a position to get long this stock. So, two possibilities here. One, buying at a downside, or two, waiting for it to move up higher and close back above the 200-day moving average. HCA having a nice day. You can see though that the price came right to about 50% of this bar. That 50% that 50% thing happens all the time. If you have a big up bar, this is a big down bar, but if you have a big up bar and if it comes back, it may come back to the 50% of the big up bar. But in this case, it's the opposite. You have a big down bar and a reversal right back into the halfway point of this bar. So I wouldn't be interested in buying HCA today. IBB, you can see it got right down to the 30 RSI, and that's exactly where it held, and that was a good time to buy, waiting for a bounce. I didn't buy this because I had Merck, which is, not exactly biotech, it's pharmaceutical, but it's kind of in the same space. So, um, congratulations to anybody that bought that 30 RSI dip. That was a good buy there. Would I be interested in buying this now? Probably not, just because you have this big monster bar, just 3 days ago. That means there was a lot of selling there. I would just have to wait for biotech to move sideways, give me a double bottom, possibly go back down, test the 30 RSI, but Not interested in biotech here. Intel down a penny today. So the chips are not doing as well as the other technology shares, but it's a 76 RSI. I would not be interested in buying here. Plus, we have earnings coming up. Russell, big, strong day today. 58.45 RSI. Oh, just give me 1 second, please. Okay. All right. You know, that is interesting there. Um, but I don't think I'm going to buy it. We're coming into this prior range here where we had problems before. It's a 58.51 RSI. It's not that the RSI is too high, but what concerns me is this big down bar and then the close below the 200 and back over. If this was the SPY or the Nasdaq, I would be much more likely to do it. But the back test on the IWM off of the 200 is not as good as it is on the SPY and the Nasdaq. So I am going to just go ahead and let this one go. Now, tomorrow, if we get down here, if we get down to about halfway of this bar, if we get down to about 50% of this bar, I may consider adding there because that would give me a better risk to reward. Because right now, if I buy here, really, where's my stop? Well, probably, I could use the 5 day. Actually, that probably would be the smarter way to go is just to use, I'm sorry, the 10-day, this orange line right here. But I'm just going to let that one go. If we come back down, test that 10-day and it holds, then I would enter there using the 200 as my stop. But right here, if you bought right now and you wanted to use the 200 as a stop, that's a long ways down there. And are you going to have twice this to the upside for your profit potential? I don't know. I don't know. So I'm just gonna let that one go. Johnson and Johnson, boys, that been crazy all over the place lately, right? MACD did go positive for a 63.57 RSI. For me, it's just too volatile. I would rather wait for a pullback to the 50, see if we could get an entry that gave us a good risk to reward ratio. Because if you buy here, at the very least, you're going to have to use the 5 day as your stop. And that's a long way down there. From here to here, you probably, for this to be really a legitimate trade, you're going to need twice that to the upside to justify this kind of stop. And I don't know. I don't think it has it in. It might, but the volatility in the bar ranges are just too large for me right now. Coca-Cola. I did buy Coca-Cola here. When we closed above these previous bars, we rejected the 200-day, and we closed below the 50 and back over the 50, and I rode that from here up to here yesterday. I knew earnings were this morning, so I had to get out. So if I would have held, it would have gone my way, but it could have gone the other way as well. So better not, just better not to gamble on earnings. You just never know what's going to happen, and if you're going to go gamble money, you might as well go to Las Vegas and have a little fun and get something out of it. So it's just a rule that I live by. I just don't get in front of earnings, and I suggest that you don't either, if because you just really don't know what's going to happen. Again, Lockheed Martin. Okay, so I bought Lockheed Martin here back on the 11th, got out here because we had this reversal bar, but it was still a nice trade. But uh, if I would have kept it and gambled on earnings, obviously it was a great day. But you've all seen this, I'm sure. You can have surprises to the downside where you can go down 5 or 10% to the downside as well. So that's great. That's a great move. They've done very well. We're at 77.99 RSI. It's just too high for me. I wouldn't even consider buying up here, but congratulations to people that did. MasterCard. MasterCard has earnings next week. It's moving up. It's a 74.03 RSI, just too high for me to buy here. Generally, I don't like to buy over a 62 RSI. That's about my max. So this is a great trend trade. It's moving up nicely. Um, but you know, sometimes traders, when the market just trends one way, just a nonstop trade, swing traders are not going to do as well as the market because the market just keeps on going. But that's only sometimes of the year. There's other times where you have swings up, you have swings down, you have swings up, you have swings down, and traders are able to, you know, make profits twice, three times, four times a year on nice swings up and down, where buy and holders may end up exactly where they started, even where the traders made all this money. But in this kind of market where it's a one-way trade, trend traders are going to do well, but swing traders are going to get on. They're going to make some money, but they're going to miss out on a lot of the move. And so you kind of have to decide what kind of trader you're going to be. If you're a swing trader, you know, you're going to have lower drawdowns. You're not going to be in the market as much. And if you have nice swings up and down, you're going to do fine. If you're a trend trader or buy and holder, you're going to have to put up with a lot more drawdowns in your account. You know, a lot of more ups, a lot more downs. So, you know, depending on what the market's doing, either a swing trader is going to do better or a buy and holder is going to do better. And right now, it's a buy and holders market. So, if you're a swing trader, don't get discouraged. Your time's going to come. All right, Altria. So, we closed below the 200 day. Uh, you know, if it closed above the 200 day, it would be possible to buy there, but I just don't like these big range bars so close to the current price. And we have earnings coming here. So I would not be interested in buying Altria here at all. Merck we talked about that earlier. We bought this here on the rejection of the 200. Currently, it's at a 28.49 RSI, and so if it closes here today under the 30 RSI, I will be exiting this trade and locking in my profits. Was able to hit 3 profit targets today, and that's great. I did hit 1 profit target there yesterday, so about 10% yesterday, 30% today. I exited about 40% of the trade here. Huh, interesting. Interesting. Take a look at Microsoft. Boy, up much stronger earlier in the day, wasn't it? And it's reversed, so looks like it got some selling up there. Netflix. I considered buying Netflix there yesterday, but I decided not to. It would have been nice if I did, but because it took out this range, had a nice strong bar up, but I chose not to buy it. So that's okay. Let's see, Nike. I bought Nike here when we had the close above this previous high, previous fractal, and we've rejected the 50. I sold it out up here, and it looks like that was the correct place to sell it out. I'd be looking for a buy back here now into value, back at the 50-day moving average. Philip Morris. It's really stuck inside the range of this big bar here. Um, what would get me interested in Philip Morris? Minimum right now will close back above the 50-day moving average, or to the downside if we got down to a 30 RSI. PayPal has moved back into value. I'm looking for a V1, V2 in this area here, but we have earnings, so that's going to move things around. So nothing on PayPal right now. The Qs, all-time high today, 80 RSI. It's just amazing. But you know, for my type of trading, um, not possible to buy up here. It's just too high. Silver got whacked up again today. For me to be interested in silver, I would need a 5 crossing over the 20, a 5-day, 20-day cross to the upside, or a possibly, if we can get down below a 30 RSI, You can see you can see right here, we're getting close to that 30 RSI line. So if we got down there, that might be a place for me to enter, giving me a good risk to reward ratio if I'm wrong. All right, S&P 500, we talked about that earlier. I will be buying that today at the close for the overnight S&P trade. As you can see, we bought it there at the close, sold right at the open. So it was a positive trade, but this is one of those days where it would have been nice to have held on. But that's not that's not the approach. That's not what was back tested. And the back tested really shows that the majority of the profit on the S&P comes in after hours. Square. I might be interested in Square if we could close back above the 200-day moving average, but we are not there yet. The other place I may be interested in Square is if we got down to a 30 RSI down in this range on the RSI reading, um, but we're not there yet either. So, it's strange when you look at a stock and you hear me say I would buy it if it goes up there or if it goes below there, right? So sometimes they have to go higher to be good buys. Sometimes they have to go lower to be good buys. Bonds are moving sideways here. Um, I've been watching this closely because I would really like to see a move. See, this is the 50-day moving average. Now we have the 50-day moving average and the third ATR channel converging here. So what I really like to see is in the coming days, I'd like to see the price go down below, then close back above and validate that there are no more sellers under the 50-day. It doesn't mean if that happens, it won't go back down there, but it's a good foresight on what will happen or what could happen is if we test this 50 to the downside, reject it, and then close back above. And if it closed barely above, that would be the best, right? Because that gives you the smallest amount of risk to the downside if you're wrong and you close below the 50. So if we came down, close back above the 50, then I have some good potential up here if it goes this way. But if the next day it closes right below the 50, I'm out with a very, very small loss. And that's the key to trading. You have to have small losses. Set yourself into a position where you know where your stop is. That stop is close to where the current price is. And if it closes below that price, you're out for a small loss. But if it but be open-minded with it if it moves up. So good risk to reward ratios. That is the key. And being patient. I haven't seen anything on here today that I want to buy, right? The market's moving up, but I'm fine with that because I've been doing this so long, I just know that you have to wait for good setups. Even if the market's moving away from you and you're not involved, well, that's okay. You know, that's okay. It will come around. It will come around to where you'll have a good part of the year or the week or the month where you will have some positions. Tesla um, rejected these prior lows, but we have earnings, so it's just too close to earnings for me to get involved. Natural gas, boy, that's getting low. If we had to close back above the 30 RSI, you can see how low we are on the RSI. If we had to close back above the 30 RSI, I may consider getting into it for a bounce, but the bounce would probably be up into this range, right? It doesn't mean it's the bottom. So nothing there. United Healthcare, big bar. We've rallied up here. Um, nothing, nothing for me interesting here. Oil continuing to move up. 75 RSI. If I were in this trade, if you had taken this trade over the 200 and now you've ridden it up to here, where would I get out? I would get out if we had a close below the previous day or possibly a close below the 5-day moving average or a close below the 70. So if I was in this trade, that's how I would manage it. I certainly wouldn't let it come back down to the 200, right? I mean, once you start getting in the profit, you have to start trailing your stops up and not give it all back. The dollar index, yesterday we did break out and then the day after we closed back into the range, giving us a false breakout to the upside with a divergence. But today that nullifies that whole pattern because now we came up here, we made a new high. So uh, nothing interesting here on the dollar. Visa continues to chug up. I believe we have earnings tomorrow morning. Let's take a look. Uh, yeah, oh, tomorrow afternoon's earnings. That should be interesting. Tomorrow's a big day. Boeing, AT&T, Facebook, Microsoft, Tesla, Visa, PayPal. Huge day. Huge day. Okay, VIX. VIX is underneath a 30 RSI now. Yeah, it's 28.87. It's under 30 RSI. If it closes back above 30, I may be taking a position there. Not saying that's the bottom of VIX, but if we go under 30 and close back above, there's a good chance we could rally to the 50 RSI, which probably might be somewhere in this range. But let's wait until that happens. Verizon had earnings. We did go below the 50 and closing back above the 50, it looks like. But it's down on the earnings. Yeah, I think in order for me to get interested in Verizon at this point, I'd have to have it move down here to the 100, move sideways, go down, reverse, or possibly even get back down to the 200. That would be a good entry point. Okay, XLE, we talked about that. I bought that yesterday when we had the close below and then close back above the 200. We took out this previous range here and this fractal. It's down 10 cents today, so this is fine to hold. Consumer staples, we've had this nice move up. What I'm waiting for is I'm waiting for a close for the price to move back into the ATR channels. The ATR channels at this screen and this screen. Right in here would be a good return to value. We got above value and back into the ATR channels. I consider value because it's within one ATR, one standard deviation of the 20-day moving average. So I'm waiting for the price of this to come back into here before I initiate a trade. So real estate, we had a very, very strong move upwards on real estate. As you can see, I was actually bearish on it up here because we had these divergences. We kept going higher and higher and higher, but our readings kept going lower and lower and lower. Yesterday we closed below the 50. Today we closed back above the 50. I'm considering taking a half a position trade on this just because we did close below the 50 and then back above the 50, and this is an upward sloping 50-day moving average. So if I buy this at the end of the day here and it closes below the 50, I'm just going to go ahead and get out. But if if we have a swing back to the upside, I do have a lot of potential to the upside. Even if we get into this range, I have more reward on the upside here than I do to the downside here with a close below the 50. Now, I mean, it could open down here, but I'm just saying generally, um, my the chances of it closing below 50 compared with my risk. Sorry, I'll start over. So I have more reward to the upside than I have risk to the downside in general because I'm using this 50-day as my line in the sand. Any close below here, even if a penny, I will get out. So I do kind of like this. Let's take a look at this on the weekly chart. The other thing I like too is these are weekly bars. So here we made a high, we came back down. Now this high acts as resistance. Well, we broke through that resistance, right? So what used to be resistance now becomes support. So this previous high will become support on the downside. Again, this is a weekly bar, and you can see this particular week it did test that support and it did hold. So as long as this closes above the 50-day moving average today, I am going to go ahead and I am going to buy a half position. And you might ask, why are you only buying a half position? And the reason why is because this was a big move down. That's one strike against it. One strike for it is that it closed below the 50 and back over the 50, and it gives me a good risk to reward. Um, RSI is a 46 RSI, 46 RSI. If it closed above 50 RSI today, that would make me feel a little bit better about the trade, because the close above 50 is positive momentum. Right now we're at 46.46. It might run into 50 RSI tomorrow, and that's where it will get rejected. So it's kind of a mixed trade, but it's not too bad, especially when you look at the weeklies. I like the support back here at 35.04. A few months ago, I liked that support and it tested it this week. And then if you look at the daily, we had this close back above the 50. So I am going to go ahead and take that at the end of the day as long as it closes above the 50-day moving average, which is the gray line. And then any close below, I will immediately get out and just take my loss. But I will probably target back up here as my target, and I will phase out as it moves my way. All right, so healthcare had a nice rally off that 30 RSI down here. I would not be interested in buying it here. Um, all right, and then transports. Boy, transports was a nice trade up above that 200-day moving average, wasn't it? It's 66.34 RSI. If I were in this trade, I would probably hold it until we got a 70 RSI to the upside and a reversal back under. But if you're in this trade, there's really no reason to get out. Uh, again, if you were in this trade and it starts moving down and tomorrow takes out the previous low, I would probably lock in my profits there. Or if we lost the 5-day moving average, or to the upside if we go up to 70 RSI and then fail and come back down. All right, so I believe we only have two possibilities today. We have Etsy. If Etsy closes above the 50-day moving average, which is 65.56. 65.56. Yeah. Yeah, I don't think I like it. I mean, I just don't like that big bar. I don't like that we haven't been able to break above 50. Um, it's unlikely. It's unlikely. And then real estate, I'm taking a half position. So, a half position means I'm taking 5% position. Normally I take a 10% position. If I have $10,000 in account, I'll take a 10% position. That's $1,000 worth of stock. But because I'm taking a 5% position, a half percent position in this trade, if I had $10,000 in account, I would only be buying $500 worth of this at the end of the day. Okay, so let's take a look at current trades here and see if we have to do anything with our current trades before we buy those other ones. Okay, Dexcom right here. Oh, sorry, this is the time of the day where I have to move back and forth from accounts, so I apologize. I get a little uh, disconnected from what I'm saying because I have to go back and forth through my charts so much, through my accounts so much. So, okay, so on Dexcom right here, that looks fine. And tomorrow, if we have a close below the 10-day, I would probably go ahead and take it. Merck, this is going to be one of those ones down to the wire. If this closes under a 30 RSI, Right now it's at 28.49. If it closes under there, I'm going to go ahead and just lock in the entire profit. SPY, we're going to buy that at the end of the day. XLE looks fine. Okay, so let me go in here and start moving a little of this around.
Order partially filled.
Okay, there's
Order
that.
filled.
So real estate. So we have 5 minutes left. It's always tough when you're up against the clock, but you're having to wait to see what the price action on your current positions are going to do. Um, excuse me. If you have to make 6 or 7 trades, you can't wait until the last minute of the market. You just can't. You just have to go ahead and go ahead and just take care of your business. Um, okay, I'll tell you what. I'm going to go ahead. I'm going to take care of our SPY position, our overnight SPY position, and buy those. So we'll buy those here.
Order filled.
Okay, and then over here in the other accounts, I'm going to go ahead and buy my normal SPY position. And then once the market closes, if anyone has any questions, I am be more than happy to answer them. So that's about 4 minutes from now. Okay, so I am going to go ahead. Let's see how we doing on XLRE. Well, I am probably just going to go ahead and have to buy that right now. All right, this is a half position in 2 accounts.
Order filled.
All right, there we go there. XLRE. Okay, so XLRE is bought. SPY is bought. Dexcom looks fine. Merck really looks like it's going to close under. So I'm just going to go ahead and lock in the entire Merck position because it's closing under the 30 RSI. And that was my stop to the
Order partially filled.
upside. It was a good
Order
trade
filled.
on Merck though. I'm very happy with that trade. Just a couple day trade, right? That's the thing with end of day trading. You don't make any trades until the end of the day. You do nothing, 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 and then you have to do it all at the last second. Okay, so Dexcom we are keeping. Merck we exited. Nice trade though. Nice couple day trade. SPY we entered. Let's see where we entered SPY at. Um, so we bought 292.93. 292.93. That's our new entry today on SPY. We have 1 minute, and then XLRE, and we bought XLRE today at 35.53. 35.53. Woo! we got it all done with 30 seconds to spare. So our current positions are Dexcom. Close below this 10-day would be my exit on that. Merck. Uh, nice that we scaled out there on the way up, but it closed under the. You see how we're down below here, and see how we're coming into the 30. Doesn't mean for sure that it's not going to continue up, but it is going to find some support at 30. Almost that's exactly where it bought it, or where it found the
Order
resistance at.
cancelled.
Okay, and the market is closed. Hey, I had a nice green day today, a nice profitable trade between Dexcom, Merck, and SPY. Had just a little bit down on XLE, but just 11 cents. And XLRE was our new trade that we initiated today. So yeah, good, nice, profitable trade.
Order cancelled.
Okay, so where did the market actually close? So Dow was up 145.75, Nasdaq up 105, and the S&P up 25.65. So Nasdaq was certainly the big winner of the day today. All right. Hey, if anyone has any questions for me, this would be a great time to type it in the chat there on YouTube. Any questions at all? Anything you'd like me to go through? Um, okay, so it doesn't look like anyone has any questions. So okay, if you can think of any, write them down. You can ask me tomorrow. I'm happy to answer anything, any questions you have, or try to clarify anything that I did today. So, all right, well, that looks like it is a wrap for today. I really appreciate you tuning in. I hope you found it helpful. I do want to tell you, as always, that I do offer private one-on-one teaching and coaching. I do that one-on-one at nighttime via Skype. So if that's of interest to you, my hourly rates and my contact information are in the description of this video. So feel free to reach out to me via email. And then if you found, if you found today's live stream helpful, I'd appreciate if you would give me a thumbs up or share this on social media. Or if you haven't subscribed to the channel, if you subscribe to the channel, I would really appreciate it. So, okay, I hope to see everyone tomorrow, Wednesday, the 24th, again during the last hour of the market, and we're going to go through this again. And I hope you have a great rest of your day. And then on the way out here, I've got to play the government disclaimer again. So thanks so much for showing up today and tuning in. I really appreciate it. I hope this is helping you with your trading. Have a great rest of your day, and see you tomorrow.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit, No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.